Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Rick Ackerman on the line, technical forecaster and author of Rick's Picks. He's a technical forecaster who has a daily service, Rick's Picks, and he also writes some provocative essays on the stock market and the economy. So what was the last provocative essay you have written?
Well, I've been saying for a few years, in answer to the question when the Fed would raise interest rates, the answer is never, and I'm going to stick by that.
Okay, all right. Kind of been listening to our show. We talk about that too. Give us that scenario. Why is the Fed not going to make a move?
Well, because the recovery we've been having has never been much of a recovery except in financial assets, but it really hasn't lifted too many boats, especially the ones on, to mix a metaphor, the ones on Main Street. So the recovery was a lot of hype, and to talk about raising interest rates because the economy is gaining strength is a complete fallacy. People only have to look around in their own neighborhoods, their own strip malls, to appreciate the fact that business is tough out there.
Okay, well we don't have a chart up here at the bonds, but we do have one of the TLT here, and that's been recovering as of late, just kind of quiet here, retracement level here. You a buyer here of the TLT then, or you think it's just going to waddle along in the range that it's been in here for the last few weeks?
Well, TLT tracks T-bonds of 20 years plus maturity, and I had an interesting signal in this would be the December T-bond futures last night, using the technical system that I do use. Good strong bull markets tend to produce ABC corrective patterns that don't reach their D targets, and so far it looks like the latest downtrend in T-bond futures has stalled right at the midpoint on its way to a target. So this is tentatively a bullish sign. But my gut feeling is that we may not see the second huge leg of the bull market begun in 2014 in May of that year until its perceptions are widespread that the U.S. is sinking into recession.
Do you trade much at night? Do you have automated strategies, or do you wake up, hop out of bed, and do some trades? How do you manage the overnight sessions?
Well, I have a partner who's very good at setting up trades automatically. I never feel comfortable going to bed, though, with my trading application on autopilot. But I do put out numbers each night. I have actionable advice called daily touts, and a lot of them are geared toward traders in Europe in particular who are able to take advantage. For one, you see these index futures, the E-mini S&Ps in particular, make their intraday highs on these short squeezes sometime around 3 or 4 a.m. But it's difficult to trade that in the U.S., but it's opportune for European time zones.
I agree with you 100% on that one. So what are you looking at in the S&Ps today here? I'm looking at basis the September contract here. Last trade is 36.50. Big sell-off yesterday. Tested the rebound high in the afternoon session, or tested in the pre-market session, and that kind of goes along with what you said, Rick, about the extreme moves in the pre-market and after hours. Now we're here, and boy, we've been trying to battle it out with some of our other guests here about finding support here. What's your take? Just give us your short-term outlook. If you have any strategies for today in the S&Ps.
I've told my subscribers not to try to be heroes. Anybody who has a strong opinion about where the broad averages will be trading in, let's say, a week should probably move to the sideline to prevent hurting him or herself. On any given day, or perhaps for a 2-day period, the market can swing. The Dow can go 1,000 points without saying anything in particular. Looking at the E-mini S&Ps today, though, I'd be looking to bottom fish with the stop loss as tight as 3 or 4 ticks down at 1925.50. That is about 11 points below where it's trading right now. If it slips by that, what I call a hidden pivot support, I think we could come all the way down to 1911.75. I generally tell my subscribers to step up the aggressiveness of bottom fishing these hidden pivot supports if they've been short on the way to them.
Yeah, definitely. Yeah, you have to. You just got to stick your order out there and get done because the rebounds in these are they can go down, go down, go down, go down, and then boom, one bracket, 15, 16 handles, and all your profits are gone. How about the gold market here? Flirted with 1150, 1160, pulled back, almost hit 1100 on the nose yesterday. You looking for a little more, little rebound here in gold off that $1,100 level?
Well, actually, I had put out a short last night, what I call a mechanical short, with a target of 109.4 basis December. I got down to around 1100. Today we're in enough of a rally that it stomped out the short, but I don't think the rally's going anywhere. I'm negative on gold short to intermediate term.
And that along with the miners?
Yeah, but I'm looking at some of these miners, and they've been bombed out so badly that I think they'll survive pretty well, even if gold futures come down a bit. And I know there's a lot of interest in my own chat room in some of these oversold junior miners.
Which ones? Which ones?
Well, for one, I usually put out recommendations on properties that I've actually seen. One that I like is Rye Patch, and it hasn't really done much in the couple of years since I looked at the mine. It's well run. They've got some very creative, very ingenious engineers who come at gold deposits from two different directions.
What's the symbol on that one?
It's RPMGF, as in Frank. And I like it's typical of a lot of small companies, they're just hanging on to survive at this point. Rye Patch was the beneficiary of a Nevada Supreme Court settlement. They had overstaked some Coeur d'Alene claims, and the law is very clear about that. The Coeur d'Alene had failed to make an annual payment, and per the law, Rye Patch came in and took possession of the property. But Nevada court ruled in favor of Rye Patch, but they didn't want to hurt Coeur d'Alene too badly, and so they wound up with the royalty agreement. So Rye Patch was in pretty good shape and remains in good shape from the cash standpoint.
I guess if you buy here, the most you can lose is a dime, right?
That's it, trading for exactly 10 cents right now.
Right.
And over the course of the year, it's been up as high as maybe 16 cents or just below that.
All right, so you like to get into these wild childs here, and you called Chipotle a lunatic stock here, CMG. Give us your take on Chipotle Mexican Grill.
Well, there's a reason that a stock trades at $700 on split, and that's because it's the desire of the powers that be to put the stock only in institutional hands. Chipotle is a good stock for the institutions to simply run higher. It's almost like they got together a few years ago in some smoke-filled room and said, "Look, guys, we've got to agree. We're not going to sell this stock. We're only going to buy it, or if we sell it, we'll sell it off just simply to shake loose the weak hands." So it has a relatively predictable earnings stream, and barring some outbreak of salmonella or something, the earnings are pretty predictable and pretty reliable. So it's a good stock to just keep running up and up and up, and I think it's a good benchmark really for institutional mindset.
Okay. And any particular entry points or exit points in here you're looking at?
The stock just wants to go higher, and looking at the weekly chart right now, a very long-term trend. I'm going back to 2014 to produce a projection of 789, currently trading 718. So there's plenty of upside there, and there's a couple of bullish patterns at different degree pushing it. So it looks very bullish to me.
And what about the crude market here? We made that multi-year low. We got a bounce towards $50. Kind of just hanging out in the mid 40s here. Where's our next move going to be in crude oil?
Well, my long-term call is very bearish on crude, down around 29 bucks. Currently trading 44.70 on the October NYMEX contract, but we're in a pretty good short squeeze right now. And I think the reason for that is that this is one of those instances where everybody's bearish on crude for the right reasons. You know, supply is certainly heavy, and the big buyer at the margin, China, is going into a slowdown that will impact crude prices negatively. So rather than you don't see situations where everybody's right and everybody makes money, and the way Mr. Market avoids that is simply to run crude up in a way that's going to test the guts of bears.
What do you make? I'm getting a little itchy on this one here. I'm looking at this consolidation period. You had the run up, like I said, from 37.75 to 49.33. My 50% retracement comes in right at 43.50. Today's low 43.36, and then a low a few days back at 43.21 here. If I was looking at that and looking at this little consolidation here, I mean, just the pull back and to just getting a launch pad to go higher another 10 12 points add to the short squeeze.
The most I could see, and this comes from a pattern on the hourly chart that goes back to August 26th, would be 54 bucks and a couple 54.02 to be exact. But the pattern that produced that target came within a hair of being violated this morning. The key low was 43.21, made back on September 2nd, and we're just barely holding that. If we slip below, I would say we're not going to see that 54 target. The stall that occurred on September 3rd at 48.62, again, this is basis October, essentially validated the pattern, and I can promise you that if crude does pop above that 48.62 pivot, we'll see a minimum 51.32 and maybe all the way to 54.02.
All right, so we've covered Chipotle and we've covered crude, S&Ps, bonds. You got everything covered here. How about everyone's favorite stock, Apple Computer?
I've turned negative on Apple. I still think it's a good company, but it's not the world beater that it used to be. You know, they've gotten very belatedly into streaming music, 12 years belatedly, and they're not even the category killer in that category. The Apple Watch is interesting, but it's certainly not world-shaking as so many things that came during the Steve Jobs era were. So I think that, and also you notice that some of the stories that are getting hyped on Apple were just a little bit too out there, a little too vague. The current one being that Apple's going to dominate streaming television. And it's true that there's a big profit for someone who comes along with a hardware solution to all these many things that we cobble together to watch TV, these many different services. But I just don't think Apple is the cutting-edge innovator that it used to be. But the way it certainly got hugely oversold on Black Monday a few weeks ago, and I'm looking very cautiously for a place to get short. We've had a 25% rally in the world's most valuable stock. That's not exactly chump change, but I don't think this rally is going to take Apple to new all-time highs.
Yeah, we didn't talk to you about the flash crash. How did you have some positions coming in? Were you able to get some new ones done? Did your systems lock up? How did you handle that day?
Well, my system works particularly well when markets turn violent. It sounds somewhat paradoxical, but when stocks are swinging, really swinging, they tend to hit my targets pretty accurately. And this is something that I came to realize during the dot-com boom. You know, when stocks were going nuts, the swings were huge, but I was able to nail the highs and lows pretty accurately. But I have to say that, it's tempting in the first break of a bear market, which is, I think, what we got, the bears have been hanging on for so long that they tend to cover a little bit too early. and that's what happened. You know, a lot of my guys took in shorts before the bottom was reached. Of course, in retrospect, they're not looking too bad, but I think we're really in a bear market, nicely predicted, by the way, by my friend Peter Eliades, who was looking for a top in the New York Stock Exchange advanced decline line sometime in late April. He hit that exactly right, and I think that even if the broad averages go to new record highs, you're never going to get the breadth to follow, and so I think the bull market going back to March 2009 is over.
You do. So you think we're in a cyclical bear market here?
I do, but it's going to go kicking and screaming lower. You know, you might say, well, we're not really into a bear market until institutional mindset changes. And one thing I noticed about Black Monday was that as nasty as the downtrend was, it was still what I would describe as controlled and orderly. So the big boys are still in charge here, and I don't think they're ready to pull out the rug until they do some distribution at perhaps higher levels than where we are now.
But you don't subscribe to the theory that there's just so much money out there that's finding a home. You can't put it into anywhere with interest rates that your AT&Ts and your Procter and Gambles are the new T-bills and the new way to make 3-4% on your money.
Well, I've been a market observer since I got stock for my bar mitzvah in 1962, and I've seen enough bear markets to kind of know to recognize the blather when I see it. You know, there's never at some bull market top going to be a shortage of reasons why it's different this time. You know, why this bull market can continue forever. But when push comes to shove, all that money that supposedly is out there can vanish overnight as a function of what's happened perhaps in Asian and European markets.
What stock did you get for your bar mitzvah?
It was, I believe, Comsat from a stockbroker friend of my dad's, and I used to go up there and just kind of watch the ticker when I was too young to know what it was all about. But I've been.
Did it go bye-bye? Did it get taken over? Because I haven't. Is it? Do you remember what ended up happening to it, or do you still got it in your portfolio?
Comsat did pretty well. I think it was. I can't remember when I cashed it out, but it was a good stock. Maybe not as good as some of the Nifty 50 of that era, the Xeroxes. But I became a market watcher at a relatively early age, and every time we're at a bull market high, there's just never a shortage of blather about why it's never going to end.
Right, that's true. Before we let you go, I mean, you're looking at a cyclical bull market here, and like you said, it's going to probably go kicking or screaming. Is there one stock that you would put in your portfolio that are a commodity? Would it be gold? Is there something that is it Chipotle Mexican Grill? People are still going to be eating burritos even in a bear market. Do you have one stock that is maybe the Teflon stock?
Well, I try. I'm not a big stock owner. I like to be able to give my subscribers a disinterested perspective.
Okay.
The only stock I hold right now is a company called Snip Interactive. I like it because they're marketing in a way that I can understand. I've talked with the CEO. I think he's a very imaginative guy, and there's plenty of space in the niche, which is essentially interactive marketing. You could be walking down the aisle at Walmart, and you'll get there'll be a little placard that says "Scan here for a great deal," and it basically captures shopper interest in real time.
Symbol?
So
You got a symbol on that one?
It trades on the Canadian venture, but
Okay.
also as a U.S. stock, the symbol is SN as in Nancy, IP, F as in Frank. And the last quarter, the earnings were looking a little bit sketch simply because their margins had declined in the previous recording period. Margins were way off, but they've recovered, and the stock has a pretty good cash reserve right now, and I think a lot of ideas. And if you look at their list of customers. It's growing with a lot of blue chip clients.
You're not going to get hurt owning this one, Rick. I guess.
No, again, it's a cheapie. It's a penny stock, but you did ask me which stock I like.
I know, and you answered it accurately. Rick Ackerman, technical forecaster and the author of Rick's Picks. He's an active trader, giving us a good look at the market, Rick. I'd follow your mode of technical analysis, and thanks for touching on so many stocks and commodities. You really covered the whole gambit. Have a great trading day, and hope Brianna can get you back on again soon.
Well, thanks much, Joel. Take
right.
care now.